3 days. That's how long it took me to pass an Ftmo challenge with 10%. And the craziest part, 1 week later, the exact same strategy made me plus 7.5% on my live account. No, this is not luck. And no, this is not a scam. If you're curious, you can scan the QR code on the screen and verify everything yourself. Because at this level, there are no excuses anymore. Only 2 things matter: discipline and a precise strategy. And today, I'm going to show you everything. If you're struggling to become profitable, if you keep taking loss after loss, or if you're jumping from one strategy to another with no results, then this video might change your trading. In this video, I'm going to show you exactly, first, how I passed a 10% Ftmo challenge in just 3 days. Second, the strict rules I followed. Third, my gold scalping strategy, simple but extremely powerful. And finally, my best advice to help you reproduce the same results. But listen carefully. This strategy does not work for undisciplined traders. So if you're watching this just to try something quickly, you can leave now. But if you're serious and ready to apply what you learn, then stay until the end. Are you struggling to find a profitable strategy? Good, because what I'm about to show you is worth thousands of dollars. And today, you get it for free. So make sure you watch until the end, take notes, and most importantly, apply. And if you want to see real trading content, wins, losses, and the truth about trading, then subscribe now. Because here, we don't sell dreams, we show reality. How did I pass an Ftmo challenge in just 3 days, while most traders fail? More than 90% of traders fail either at phase 1 or phase 2. And even those who succeed usually take much longer. And only a very small percentage actually manage to make a withdrawal. So I know what you're thinking. You want me to jump straight to the profitable strategy. But if I do that, it's like giving someone power without teaching them how to use it. So instead, let me be honest with you. Here are a few secrets that completely changed my results. Because trust me, this was not my first attempt. I burned multiple accounts before finally understanding this. Let's start with psychology. And I won't go too deep for now, but here's what I mean. Patience when entering a trade, patience when taking profit, and proper trade management, knowing how to secure your profits and when to cut a trade at the right moment. If you want a full breakdown on this topic, let me know in the comments and I'll make a dedicated video. The second thing I understood is money management. Yes, my friend, if you don't master this, you will never last in this game. Trust me, I lost several accounts in the past because of this exact mistake. But that's a topic for another video. Now, let's talk about this famous gold scalping strategy. This strategy is based on 3 timeframes, an approach known as top-down analysis. First, the M15. This is my higher time frame. It helps me identify the overall trend and define my take-profit zones. Next, the M5. This is the intermediate time frame. This is where I spot market opportunities and refine my targets. And finally, the M1, the lower time frame. This is where I execute my trades. This is where I take my sniper entries. That's actually why I named this strategy Sniper Gold. Why? Because it allows very precise entries with tight stop losses and therefore high risk-to-reward ratios. But be careful. This only works if you trust the process. Because without discipline, even the best strategy won't work. Alright, enough talking. Let's see now, in practice, how this actually works. First, when you open your gold chart before or during the US session, go straight to the 15-minute time frame. Your goal here is simple. Identify the market direction. Are we in an uptrend or a downtrend? to do that, it's very simple. If the market is making higher highs and higher lows, then we are in an uptrend. If the market is making lower highs and lower lows, then we are in a downtrend. And in the worst case, if the market is ranging, do nothing. Just wait for a clear trend to form. Now, once the trend is defined, move down to the M5 timeframe. Here, you want to identify key zones where the market is likely to react. If price comes back to these areas, it should either reject or break. So mark these zones clearly. Once that's done, drop to the M1 timeframe. And now, you wait. Patience is key here. When price reaches your zone, two main scenarios can happen. Either the market breaks the zone and continues, or it rejects the zone and reverses. And that second scenario is exactly what we're looking for. At this stage, patience becomes essential. Now, here are the 3 confirmations you need to watch before entering a trade. First confirmation, the engulfing candle. Price enters your zone, then a candle fully engulfs the previous one. Once that candle closes, you can enter immediately. This setup works around 60% of the time. Second confirmation, a rejection with a long wick. Price reaches your zone and forms a candle with a long wick. This shows a clear rejection. You can also enter immediately. This setup works around 50% of the time. Third confirmation, the best one, the one I personally use. You wait for price to reach your zone, then form a change of character. Once the change of character is confirmed, you place a limit order on the last opposite candle before the breakout. Your stop loss goes below the last low, or above the last high depending on direction. And for your take profit, you go back to the M15 timeframe and place it at the last high or the last low. With this technique, you can easily achieve risk-to-reward ratios of 1 to 10 or even more, and all of that within just a few hours. Important, placing your take profit on the higher timeframe also applies to the other 2 confirmations. Now, let's talk about trade management. Once your trade is triggered, your job is not done. You have to manage it. And here's how. After entry, move to the M5 timeframe and adjust your stop loss progressively as the market moves in your favor, because the market is unpredictable. We've all seen trades start very well, then suddenly reverse without ever reaching the take profit. So protect your profits. Let's talk about risk management. A trader only has a maximum of 10% total drawdown. Anything beyond that, and you fail. So I set strict rules for myself. Rules I followed with 0 exceptions. I risked 1.5% per trade during phase 1, with a 10% profit target, because this is the most difficult phase. Then I reduced to 1% risk per trade during phase 2, with a 5% target. This is the confirmation phase. And finally, I stayed at 1% maximum risk on my live account. So, now you have the full process, from analysis to execution, including the rules and risk management. But remember one thing, it's not the strategy that makes the difference, it's the discipline you apply it with. Because 2 traders can use the exact same method and get completely different results. Now, everything is in your hands. Test this strategy, apply it seriously, and most importantly, stay consistent. And if you want to go further, if you want me to break down psychology, risk management, or other strategies, let me know in the comments. And don't forget to subscribe, because here, we don't sell dreams. We show reality.